It's time now for a closer look at what's happening in the markets today, and for that I'm joined on the line now by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on today.
Thank you for having me.
So the rally on Wall Street continued into Wednesday, yet more record highs with the S&P closing in on 3,000. U.S. markets, of course, will be closed on the 4th of July, but how are the markets looking today globally and in Korea?
Yes. As you said, most of the markets are rising quite rapidly due to the increased liquidity in the system. Most of the people are expecting that the interest rate will be lowered in the future. The International Monetary Policy, IMF, Managing Director, Christine Lagarde, has been nominated as the next president of the ECB. And most of the people are thinking that she will be much more dovish and continue to provide low interest rate environment for Europe. Also, the President Donald Trump said that on Tuesday that he is going to nominate Judy, Shelton, and Christopher Waller for the Fed governor appointees. Clearly, these two people are much more pro-lower interest rate environment, and clearly the central bank, the Fed, might be coming out with a much easier monetary policy going forward. Clearly, these are making movement in terms of the interest rate. We have seen 10 years government bond rate of U.S. falling to below 2% level, and continuation of the additional liquidity into the system is making liquidity rally for the market. And they're expecting that on the July of 31st, there will be lower interest rate we applied by Fed that might trigger the summer rally. Clearly, most of the markets have shown quite strong movement, including the Nikkei and Europe. But as for the Shanghai, the Chinese market have shown some corrections today, which has fallen by about 0.7%, and Shenzhen also down 0.5%. Main reason for that is because China have said that they might not apply lower interest rate environment for the time being. They think that they have continuation of other measures to boost the economies, and they can support the current system without lower interest rate environment. Obviously, no additional liquidity means that lower market, and that's been what's happening to the Chinese market. As for KOSPI, also been quite weak, but today has shown some recovery, and KOSPI is up about 0.6%. The KOSDAK is down 0.26%.
Well, now today's big story is Japan's measures coming into effect restricting the sale of key semiconductor materials to Korea. The Korean government's now planning to invest billions of dollars so that Korea can make these materials domestically and won't find itself in this position again. What's the latest on the Japan situation?
Yes, I think that what Japanese government have said is probably wrongdoing in a part regards to WTO. The Korean government have begun to work on the legal reviews of the WTO lawsuit after the Japanese government decided to restrict the export of semiconductor-related materials to Korea. According to the Korean trade officials, what he said is that Japan's measures are considered to be violating the Article 11 of the General Agreement of Tariff and Trade, GATT 1994. Government have also decided that they will invest quite heavily in terms of developing the parts and equipment related to semiconductor businesses, a total amount to be about 6 trillion won. Already they have passed the law saying that they will invest 1 trillion won for the equipment and the preliminary feasibility studies, and they will be planning to add additional 5 trillion won over the next 6 years to continue to increase the production capacities related to the semiconductor business. Since 1980s, the much stronger yen environment, Korean IT sector have been moving away from Japan dependencies, and this kind of the measure by the Japanese government will accelerate the process. The Korea's current dependency regards to the components related to the IT sector has been reduced down to less than 10%. We think that that dependency is going to go down even lower in the future.
That's a really interesting point there. Meanwhile, the Bank of Korea, speaking of trade, has released its data on the current account balance. Looks like Korea is back with a surplus of almost $5 billion, certainly an improvement from the deficit posted the month before. What do you see in these numbers?
Yes. As you said, in May, Korea's current account balance turned to surplus after a negative territory the previous month. The commodity surplus, however, was the lowest in the 5 years. Clearly, the environment for the export is not doing well. With the global economic slowdown, that's what we're seeing due to the U.S.-China trade negotiations being quite timid, and obviously that is resulting into much lesser trade amongst the countries within global arena. So that's affecting clearly the Korean economic conditions, since that the Korea's dependency on export is very high. However, though, with some possibility that the U.S. and China will be coming to some kind of agreement over the next 6 months or so, that should result into probably bottoming out of the economic growth rates for Korean economy, as well as the export numbers. So yes, right now it has turned around, and still in terms of the commodity surplus is the lowest in the 5 years. But in the future, it might be improving gradually due to the better economic conditions globally.
Hopefully so. Got it, Mr. Yu. All right, we'll have to leave it there today, though. Thanks for your insights, as always.
Thank you very much.